Hello everyone, welcome back to another video. I want to introduce a fourth forecast, and I believe there's a 75% probability real returns in the stock market 10 years from today, which is January 10th of 2022, will be lower than the previous 10 years. So as you can see, this pretty much sums up what I believe in. And that's because the stock market has these cycles where there's periods of overperformance and periods of underperformance. So once again, we are in the SPX chart, logarithmic chart on TradingView. And this is pretty much a chart of the S&P 500 going back all the way to 1871. Yes, 1871. So basically, really quickly, you just see with your eyes that there are periods of underperformance, periods of really good performance. This is the roaring 20s that we hear so often about. 1920s. This is the Great Depression, period of underperformance. This is the 50s and 60s, period of overperformance. 70s, the Great Inflation, underperformance, and yada yada yada. It goes on and off in these periodic cycles. So this is the 80s and 90s. This is the dot-com bubble. And then guess what? What's next is a period of underperformance, and this is the Great Recession. And to probably nobody's surprise, the last 10 years saw a period of overperformance. So if you would have to guess using the past 100 years, the trend appears to be once this period of overperformance is over, we will have around a 10-year period of underperformance. And you know, this is a logarithmic chart, so to give you a really good idea of how bad these periods of underperformances are, let's go over to the Great Depression, right? So you could be like, well, you know, the Great Depression isn't all that bad. There are periods where, like, you know, if you time the absolute bottom, like let's say here in 1942 during World War II, you could say, well, during a 4-year period, I managed to get a 136% return on my money. And that is absolutely true. During these periods of underperformance, I am not saying that it is impossible to make money. I'm just saying strictly that the stock market in general will not perform well. But you can still make a lot of money using these little like bounces and such that I've just shown here. But in relative terms, you know, it is just no comparison. And we're looking at a linear chart right now. These 10 years, no, not even 10 years. What is this? These 20 years of underperformance has absolutely nothing against the 10 or 20 year period after, which is the great overperformance. And so if you were to ask me, you know, for the best bang for your buck, would you want to, you know, try to time the tops and bottoms of the stock market during periods of underperformance? My answer would be no. You just try to take away your money during that period and only invest during periods of overperformance. And so, like, you know, let's say we look at this period and, you know, after the dot-com bubble, you know, you go like, wow, during the past 4 years, I made pretty much 100% return because I'm so smart. I perfectly timed the bottom and I perfectly timed the top. Well, congratulations, genius, but your life would have been so much easier if you just took out your capital and allocated somewhere else. And in the meantime, you could have just gotten in the stock market during the easy mode, which is during a period of overperformance. So, you know, you can make money again, but it's just so much easier to just wait for these periods of overperformance. You know, this is like the hard mode, the veteran mode, right? And this is just the easy mode. And I would personally much rather invest in the easy mode. Okay. And, you know, if you look at this in relation to the logarithmic, well, these aren't really logarithmic charts, but my super ghetto logarithmic charts that I have here, you'll notice something very interesting. And so I'll draw it out in front of you. And this is the top band. This is the middle band. This is the bottom band. Boom. And this is also the middle band. All right, so what you'll notice is that these tops or these periods of underperformance, they start to happen once you reach the top of these resistance lines. So Great Depression, Great Inflation, dot-com bubble, and Great Recession. Each and every one of these periods happen once we hit the top of one of these bands. And so, I kind of don't like having one forecast kind of be related to another, because that's like a dangerous psychological thing of like, you're building a Jenga tower of ideas. But I do believe that this forecast, 65% probability the stock market declines at least 30% from its peak and a recession by December 1st, 2024. That's my previous video that I posted yesterday, and that's mostly because I think we're going to be hitting the top ends of this band soon in 2023 or 2024, and that'll cause it to go down. And so I personally believe that can trigger a period of underperformance, because historically, with the observations and data that I have, that is what happens. And of course, I am looking for new perspectives and different ideas to disprove what I currently believe in, and I would gladly welcome that. But for now, I can't really find evidence against that. And also, I don't really focus on fundamentals, because I believe there's just too much noise and not enough evidence behind it. I think it's a lot of narratives and like stories and opinions. I think looking at the charts like this is much, much better and much more evidence-based. So, that's my forecast, and I pretty much explained, I'm trying to explain in simple terms why I believe that. And so if that's all you want to see, you can click off the videos, but I want to go into these other points if you want to keep watching, and that's, just because the stock market goes down or underperforms, it doesn't mean it's the end of the world or all societal or technological advancements will stop. Like during this period of underperformance between the years 2000 and, also these underperformance years depend on how you measure it. And I'm probably not measuring it too well. But during this period, 2000 to 2011, this is when the internet started becoming a thing. This is when we basically went from no internet to the world runs on internet, and we got little phones, little supercomputers that fit into our pocket, and the world really technologically advanced during this period. And there was a lot of wealth creation in third world countries and yada 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 during this period. So this is by no means me saying that the next 10 years, 2022 and 2020, between 2022 and 2032, that scientific advancement will stop, or like Kathy Wood's ARK fund will actually the fund probably won't do too well, but I think the underlying technologies would do really, really well. And I'm not saying that everything's gonna be really shitty, and my last point is life will go on, and things in general will probably be fine. It's just that I think the stock market will do really bad. And honestly, I don't know how, a lot of wealth will obviously get wiped out, especially if you're banking on your 401k or you have pensions or whatever. That's going to happen, but, life will go on. Things will get better after that. Some actionable things that I am personally going to do is I'm going to probably enjoy the bull market until whenever we start hitting this area, and then I will likely pull my money out of equities. And I don't really have money in equities right now. It's all in crypto, but I would advise getting your money out of equities and putting it into something else. And of course, if you're a really, really, really good money manager, of course you could still make money during this period. But for the average person, you are much better off probably investing in different markets. And eventually, I don't know exactly how accurate these years will be, but I know for a fact that after the period of underperformance, as long as the fundamental underlying factors that creates this chart remains true, there will be another period of overperformance, and I will personally be looking forward to that. But of course, the underlying factors behind this trend must remain true, and that's probably United States being the biggest economy in the world, and I don't really know exactly what the underlying factors are, but I will have to keep an eye out for that. So anyways, if you like the video, please please subscribe. I will, I'm always open-minded to changing these forecasts and changing the probabilities when I get new information or different perspectives. And so that's the video, and I'll see you guys next time. Bye.